So decided to go for the GER40. Okay, so they're having a DAX in there. It's going to be a little bit less affected. I say a little bit less. It is, in a very realistic sense, just a little bit less affected by the Fed event than the US markets will be, but it's still going to be impacted by it. Hopefully less so. Good afternoon, ladies and gentlemen, and welcome one and all to this afternoon's market report breakdown session, where we dig into this week's market report, let you know exactly what's going on, when it's going on. This week is an incredibly big week. We do have, of course, the Fed interest rate decision that we've all been waiting for. Anyone who is worth their metal in the markets has indeed been waiting for this one, as we see whether or not the Fed are going to be cutting those interest rates down or keeping them at the same level in a sustained monetary policy fashion. I think we all know where it's going, of course. I think most of us do. But it is the first time we would have seen a rate cut by the US for a long time. And it also is going to paint the picture of what we can expect in the months to come. So, good afternoon officially to all of you inside the trading community. Great to see you. And also good afternoon to everybody on the outside of the community on YouTube. Hope you guys are doing well out there today and looking forward to a good, strong trading week ahead. Listen, if you're not subscribing to the channel yet, please give us a follow. Most of the content on here is direct, straight to the point. It's easy to digest. It's not against the narrative, as you see so often. I'm not going to be trying to sell your wares or anything like that. This is exactly what we try and do here, give you decent, rich, content-based focus constantly. So just give us a follow. And also, of course, if you want more like this, please feel free to join into our trading community. We are a growing name in the industry at the moment. Lots of people getting interested. There is a basic tier. It is free. There is no paywall whatsoever. So please come and check us out. So without any further ado, let's get going. Good afternoon to you guys. Good to see you there. So let's get going then. So this week in the market report, let's of course start with some portfolio breakdown info. Last week was a bit of a rocky show. We did end up green, 2.24%, which was, not bad going. But it was pretty gnarly on the last day, at least. Friday was pretty crazy. We had consistency throughout the week, Monday, Tuesday, and Wednesday, all hanging around that 0.5% until we got to Thursday, where we had a really nice big explosive day at 1.5%, 1.57%, I think it was exactly. But then Friday, we got an absolute beating and took a 1.37% hit, I think it was. So, yeah, it was a really crappy end to the end of the week and left us with a 2.24% number rather than quite a significant weekly gain before that. So we did actually end up fading the Friday, which is something anyone who's inside the trading community will have heard me say all the time. Did actually fade the Friday myself. So there we go. Looking down here then, so far, annual return is at 114.19%. Good afternoon to you, Matthew. Good to see you, mate. Good afternoon to you, Cora Tim, as well. I think I see Nadia in the room there as well. Good to see you. So, yeah, we are currently at 114.19% annually, which is great. Monthly average of 12.7 with a weekly average of 2.9. We have actually had a reduction in all these figures at the moment. That's predominantly because of last week's low growth period. Look, 2.24%, not going to complain by any stretch of the imagination, but still it's seen a bit of a knockdown as a result of that. September's trading volume has already exceeded August's, obviously August being a major traveling month for myself. But yeah, so with September at the moment, longs more than shorts, 20 longs, got like 18 shorts, I believe, at the moment. And yeah, continuing on with that fashion, looking at the last week's returns in the major indices as well. The Standard and Poor's there, plus 2.1%. We had the UK FTSE plus 1.66%. So it's pretty average across the board. So moving into the market trends and opportunities this week, then I've actually decided to take a step away from the US markets this week as a result of the Fed event. I didn't want to post anything up and it be sort of digested by you guys or anyone else for that matter who perhaps is not a full-time member here and also again perhaps doesn't have the expertise, possibly experience to be able to manage trades through significant periods of volatility, which this week will be. So decided to go for the JA 40. Okay, so having a DAX in there, it's going to be a little bit less affected. I say a little bit less. It is, in a very realistic sense, just a little bit less affected by the Fed event than the US markets will be, but it's still going to be impacted by it. Hopefully, less so. Next to that, the Forex pair, we've got the pound against the Oz. I've actually been enjoying the pound against the Oz recently. It's in such a nice established multi-month range at the moment. It's just super clean out there. So really nice trading parameters. We will be looking at either the continuation following the retest, which you can see on your screens now. There's a little retest in there happening at this stage, and we're looking for either for that continuation back down to the lows here or the break close and the retest and the continuation. I have outlined my fundamental sort of headlines in there as well. So please feel free to go and check that out once you've downloaded your own copy. Moving down into the UK Brent arena here. We did get some OPEC Plus sort of news, I think, which would cause demand more than oversupply. So I've kind of got a multitude of biases here. Look, at the end of the day, I am expecting the lows to be hit at least once yet again before we get the confirmed breakout. So that's kind of my sort of, how do I say this? I don't want to guarantee. There's no such thing as a guarantee in the markets, right? But I'm very, very, very certain that we will see a move back into the lower liquidity before we get the big breakout. It's just a matter of time. It might do it straight away. It might have a pump to the descending level first and then come down. But ultimately, I am looking for that low to be struck. And it's when this low is struck and when we meet that commercial money down there, which is when I want to be considering taking the long. And we'll be riding that back up to the descending level, potentially even above. So we'll have to stay tuned for that one, see how it plays out over the course of the week. And then finally, we've got the weekly view on gold this week. And gold's taken the precious metal spot yet again. We've had such an incredible rally recently. It is coming to a little bit of a slowdown here. Could this be the build up for the next leg on? Could it be the beginning of commercial profit taking and the pushback down into one of our previously created liquidity points that, I might add, have not had any kind of retest yet? Well, this week is all going to be about the Fed, okay? And I'm going to be talking more about that as well throughout the week and as the week goes on and leading up to the event. And I will be hosting a live trading session and press conference analysis inside the trading community. It will all be live in real time. That's going to be quite late. I do appreciate have some members on the other side of the world here at the moment. It's going to be difficult for you guys to get to, but please feel free to catch up on that in the morning. If you are around and you don't have anything better to do than listen to me drag on, then please feel free to come and spend an hour with me. And yeah, let's see what the Fed's going to bring. It's going to be a big one. I am pretty excited for it. I've been looking forward to this one for a while now. So fingers crossed it'll be worth actually hosting an event for. Let's keep our fingers crossed. But anyway, as I was saying, the Fed meeting for guidance on real rates is what's going to be driving gold prices this week. So we'll have to stay tuned on that one. Now, in terms of market challenges, we've got three major events that made the algorithm this week, the economic model that I use. So we've got the BOC, the Fed, and the BOE. Those three events are the ones that have taken the limelight this week in terms of actually reaching the scale in terms of market impact. The BOC has got actually come in at a 1 out of 10. I'm not actually sure why. I can only assume because of UK Brent and possibly the GA and its cross impact correlation to the Australian dollar with the Canadian dollar. That's probably where that's coming from, but it's definitely going to have a bit of a bump on UK Brent as well, I should imagine, in some shape or form. So that's got a 1 out of 10 in terms of market impact to, one of our weekly sort of trading opportunities here. The Fed interest rate decision is a blinding 10 out of 10. It was instantaneous. So there was no faltering there. 10 out of 10 on that one. So very, very dangerous event in terms of market volatility, opportunistic event as well, depending on who you are, of course. And then we have the BOE interest rate decision as well coming out after the Fed. That's on the Thursday, I want to say. We'll double check that in a moment. But the BOE interest rate decision as well, which actually came in at a 3 out of 10 in terms of what we've got going on here. So it's going to be a bit of a market impact. Obviously, we're looking at the GA this week. It could cause a bit of a market volatility strike there. So just we'll have to be aware and sort of risk accordingly, I suppose. In terms of the state structure volatility index this week, we have a couple of notable callouts. We don't have a notable call out in the GA. We didn't have any. We didn't know what the data was for the DAX last week as it wasn't on there. So 61.1%. Frankly, I mean that's pretty damn bullish in terms of commercial liquidity. It's 11.09% above the mean. So that's pretty bullish in my eyes. The notable callouts, however, UK Brent and gold. Now, gold has had a big reduction. I think maybe a 7% reduction in commercial longs, now turning to commercial short liquidity up at these highs. It's still above the mean, but you're not going to see just a clean cut from week to week. It happens over a process of weeks. So I would anticipate the gold market to probably come down before going up, which actually falls into line quite nicely with what's going on fundamentally and what's going on technically at the moment, just as an extra area of confluence for us. The other thing is UK Brent. And I've got to be honest, guys, I can't remember what the last number was at all. All I remember is UK Brent is a notable call out, and I don't have it written down anywhere on notes or anything like that. So I'm in the blind about that one. I do apologize, but I cannot remember what the notable call out was. I think UK Brent was actually quite low, maybe 41%. And now we're looking at 46.83. Please don't quote me on that, but I believe it's about a 5 or 6% increase in commercial interest longs. So having that number, sort of building up slowly but surely is at the same time we're looking at the candlesticks and the price action building within this margin here. And, before we get that big sort of explosive breakout that we're all kind of sitting poised for and waiting for. So that's a great segue anyway into the economic and order book impact report. So as to be expected, the Fed interest rate decision taking the limelight this week with a 10 out of 10. The BOC. So remember, okay, just for those of you who have maybe come in for the first time, you've never seen this before, this is the market challenge model, which looks at economic events taking place and their respective challenge against the assets that we're looking to trade this week versus the economic impact scale. Now, this is broad market impact, how much these events will shake the market in overall. So the BOC interest rate decision has actually generated a 5 out of 10. That's quite significant. So probably going to be quite the move I would expect over the course of maybe Euro CAD, Pound CAD. We obviously I can't remember the tag for it now, the ticker, but the Canadian stocks, the equity side of things as well. Your oil ETFs, they're all going to be shaken up. US crude as well is probably going to have a bit of a shake from it. Those kinds of things you've got to be thinking about are probably going to be quite volatile this week. Fed interest rate decision, it is what it is. That's going to shake the entire landscape that we're focusing on at the moment. And then the BOE interest rate decision's given it's actually a 6 out of 10. That's what the model's chucked out. So look, I trust this model. I built the model and I trust it. And do you know what? It's actually done really damn well. If you look at the back tested results or the tested results that we've had since even using the market report, it's been pretty damn good. I'm struggling to understand. This is me leading on to this point here that I'm struggling to understand why the BOE interest rate decision would be coming out at a 6 out of 10. That's a pretty significant event. So looking at that one at a 6 out of 10, not entirely sure what it's thinking or what it's seen, but that is what it is. So we'll have to wait and see what the BOE interest rate decision looks like. I mean, that GA, we could be in for one hell of a ride with that one. So we'll have to wait and see. But we'll be risking accordingly anyway. We're always trading in a relatively safe and controlled environment here at the UTC. So yeah, looking forward to it. Excuse me, I'm just having a sip of my coffee. So next up, money flow trends. Nothing really there to talk about. I think, in fact, they're probably exactly the same, or maybe 0.5% out from last week's. In terms of the impact gauge from economic events, we've got 50% exposure to the forex market, 15% in equities and equities and indices, with 10% for commodities. So yeah, not really too much going on there. FX is where it's going to be for market volume this week, and what's going to be at the sort of forefront of the economic events that we're facing. In terms of the equity markets there, and equities in focus, I mean, the spotlight equity of the week is our horse, and this is a premium home furnishings retailer. Look, guys, I am not a specialist in this whatsoever. I really don't know too much about premium home furnishings, but they're doing really good. The data, that is what I focus on. I focus on the numbers, and the numbers don't lie. It's been very good. It's been a very strong contender. So I think that's definitely worth a check out for you. In terms of the others, we got PGNY, Duolingo, PSTG, and XPOF up there. All of them relatively decent buys, buy opportunities. You're probably looking, as always. I try to put it into the bracket of 2 to 3 week buy and holds, so you can be kind of in and out and not exposed long term. Because I know, well, yeah, I'm just aware of various financial capabilities and so on and so forth. Looking at the institutional buying interest by sector, 2.1 billion inflow in tech. The second spot this week has actually been taken over by biotechnology and healthcare, and that's had 1.6 billion inflow. Now, I believe last week it had maybe 700 or 800 million, I think, or maybe the week before. So what you're looking at there is a clear as day pattern. Things are happening in biotech. You do want to be involved if you want to be making money 10 to 15 years down the line, especially with the introduction of AI now in the process. So a lot of money going into biotech. Industrial had 1.3 billion market inflow, and then energy had about a billion, had 1 billion. You won't be able to see the text; it's so damn small. You got to zoom right in. But yeah, it's had about a billion inflow. So a lot of money going into the top four sectors this week for sure. But biotech definitely taking the limelight, I would say. Even though technology is 2.1, technology is usually at the forefront, so it never comes as that much of a surprise. But having 1.6 billion, that's pretty close behind it just over the weekend in biotech. It's definitely something there. So, as I always need to do, just a quick disclaimer. The information, of course, provided in this market analysis report is for informational and educational purposes only and should not be considered as financial advice or recommendation to trade or invest. Trading in the financial markets involves significant risk and may not be suitable for all investors. So please read the disclaimer. And and please feel free to download your own market report. It is ready and waiting for you inside the trading community. No strings attached. Now then, let's dig in to the charts. We've got a big day today. It is Monday, the first trading day of the week, where hopefully we're going to be able to take a few quid out of the US Open. So that's what I'm hoping for here. So what we're going to do is check out these stocks and see what's occurring. So let's go up here, starting out with the US 30 Dow Jones. And yeah, let's go down to the 50-minute time frame here. Right on. So actually, I'll tell you what, it's been a while since I've been able to do this, but we can actually just simply recycle the zones from last trading week. That's fun. So looking at where we're trading at the moment, I don't even need that. I don't even know why I did that. Yeah, so looking at where we're trading at the moment, we've got This area here is a breaker structure point. Absolutely. Very nice BOS there. So what we're ideally looking for is the market to come up to this point of liquidity and then pop down. Not an ideal place at this stage, however. I mean, we are now only 10 to 2, which means you guys have got 40 minutes to go until the US opens up this afternoon. So I'm not overly keen on where the Dow Jones is trading. And this is simply because we've got a bit of work to do to get up there. And then we've got to look at the trigger point to come back down again. But we'll just do what we can do, right? So we're looking at the move from here up to liquidity. From liquidity, you can trigger the trade once the breaker structure is achieved. You're looking at the entry at around 45,956 and the target of around 45,821. That's around about what you're going to be looking at this afternoon for a 1 to 2.6. On the top side, you've also got that area in there, which is your long break of structure for the trading opportunity that takes place between these margins in here. Now that's going to yield around a 1 to 2.3, which is obviously not as juicy as the short, but still a nice trading opportunity for a Monday regardless. So that is right there, the full breakdown of the Dow Jones. It's definitely not that confusing today. That's something. So let's download that one. Next up on the NAS 100, I believe the NAS is trading at ATH right now. Yes, it is. So ATH has been achieved on this candlestick here, 1:15 this afternoon. We did indeed reach 24,158, highest US tech stocks have ever been. So that's quite something, I suppose. We've got this point of liquidity in here. Let's drag that backwards. This is the current ceiling. Yes, it has been faked. It's been tested once. We are still trading technically below it. At the all-time high areas, I often like to make the zones a little bit wider, and this just eliminates that sort of margin for error, creates a little bit more flexibility to have the market movement around here and stuff to account for those potential wick throughs that you might see. The next point of call is down here. This is going to be our floor this afternoon, and so now we've made the trading margin for ourselves. First things first, though. If the market does indeed want to go for a trend continuation opportunity, we are looking for the break, close, and retest of this trading asset this afternoon. That's what we need. So we need the market to break free, it retest, and then we can look at getting in on the continuation. What you're going to do is place your stop loss first. You're not going to focus on wherever you want to target. You're going to look at your stop loss in these all-time high environments. So say, for example, I want to have my stop loss about there at 24.13. This means that I can now bring my target profit up to a 1 to 2.1 or whatever, 1 to 2.05. That's going to be the trading opportunity that I'm going for this afternoon on the NAS 100. Very little trade idea. Hopefully it'll be done and dusted in the space of a couple of hours, maybe not even that, to be honest. Very small trade, 70 pips in the NAS. So that's going to be your all-time high breakout trading opportunity. In terms of the short, even simpler. We have previous margins to work with. That's something I like. We also have the breaker structure point in there, which is also something I like. We've got an entry just below the BOS, which is about there, targeting the lows, which are about here. Stop loss is going to be, I would say, about there, maybe a 1 to 2.4 out of the back of that. So that's going to be your short. Again, really nice clean setups this afternoon, the NAS 100. Please just be aware, break, close, retest first before the trade's taken on the long. Download. And then we've got the S&P 500, and I am going to include it today because it is looking, well, it's just looking great. The S&P 500 is also trading at ATH territory up here, which is incredible. The Standard & Poor's never been as high as this. So what we're going to do here is we are going to build in our sort of previously used ceiling, which is there, our previously used floor, which frankly looks a little bit more like an ascending level at this stage. So we're looking at about there, I would say, approximately, for the floor that we'll be utilizing this afternoon. So a little bit different than the NAS setup, but definitely not problematic. We've got a nice trading margin in here still. On a 1 minute time frame, that's going to be really nice and extended, and lots of room to breathe. So no problem at all. And the other thing about this is we can actually use this as our breaker structure point. We don't need a separate one like we do sometimes under the zone. So what we're going to do here is look for an entry point. If the market breaks down there, going to have the target profit at about the ascending level point you think it's going to be hit. And the stop loss is going to be just above the point of liquidity there and above those highs that were formed here. You're not going to beat that one, so don't worry about it. This is good enough for the time being, especially market open, lots of trading volume. There's other factors at play. So that's the short, 1 to 2.45. In terms of the long, frankly, team, this is a runaway train. Look at it go, right? It's got a lot of bullish interest in it at the moment. So I think based on the fact we already have the Dow Jones and the NAS 100 both primed and ready for longs, even if the Dow Jones probably is a little bit far away from its proposed sort of long entry point, I think we're going to be good to avoid the long in the S&P 500, and we can just ride it out with the short there. So that's what we're going to do for that one. Now I'm going to send those trading opportunities out to you all. Just give me a moment. I'll get that done after the stream's over and done with. But just before I go, or at least ask you if there's any questions, have a think about questions now you want to ask. I do just want to cover off what we're looking at this week with the econ. So tomorrow we do start the day with unemployment rate for the UK. We then go into the afternoon with inflation rate for Canada and retail sales month-over-month data for the USA. On Wednesday is the big day, but it does start off with the UK inflation rate, building permits and housing starts for the US, the BOC interest rate decision, which is at 2:45 on the Wednesday, and then, of course, into the evening, the Fed interest rate decision, which is the big one. Now, the press conference actually starts at 7:30. I will be providing a session on that live. It will be public. It will be live, hosted inside the trading community. If you want to come along to it, please feel free to do so. If you don't, I'm not going to be offended. It is awkward hours, especially for those of you with young families and kids running around and stuff. I do get it. I'm going to have a house full of kids at that time as well. So it's going to be real interesting to get some Fed press conference analysis done with them charging around like a bunch of loons. But it will be fun regardless. On Thursday, we've got the BOE interest rate decision. That's in midday on 12 o'clock. May provide a little bit of analysis on that one. In a live environment, I mean. Obviously, there's going to be analysis on it regardless, but in a live environment, I'm not decided yet. And then on Friday, we end the week with the BOJ interest rate decision at 4 a.m. GMT. So obviously not going to be doing that one. But really, we end the week with UK retail sales, and that's at 7 a.m. And by the time we get ourselves at the charts, that's going to be done and dusted. So very relatively speaking, quiet Monday, a very quiet Tuesday, a very quiet Friday. Wednesday and Thursday are the days to be aware of this week. Okay, so with that all being said and done, are there any questions, ladies and gents? I hand the floor to you. Or are we feeling good to go? Are we excited? All good? All good? All clear? All good? Thanks. Just to confirm, you won't be putting a pre-order in for the US Open. No. No pre-market trading. No pre-market trading. Yeah, no problem at all, buddy. No problem at all. All right, guys. Well, I will leave you there then. I hope you have enjoyed this session. I hope there's been something in there for every single one of you out there. Have a great trading week. If you are on the outside of the trading community, please, again, feel free to come and join in. Like I say, there's no strings attached. There's no paywalls. If you want to pay for additional services, that is at your preview, not being forced down your throats. If you are inside the trading community, then I look forward to catching you all tomorrow. And I also look forward to seeing what happens this afternoon. So I'll see you then. Take care, team. It's been a pleasure. Catch you then. Bye-bye.